As we speak, crude is now sitting at a fresh 14-month high. So what is really fueling so much of optimistic price action in crude? Let's discuss that with Vandana Hari. She represents Platts and she joins us live from Singapore. Vandana, fantastic to have you back on ET now. Vandana, crude prices are at a 14-month high, and that's largely due to Egypt. But Egypt is part of ancient history. It is not a big producer or big consumer of crude.
Yeah, so I would point out a couple of things, Nick, and you quite rightly pointed out it's multi-month highs right now for crude. But equally, also you'll notice that most of the rally in the crude we saw in the first half of this week, and this morning Brent at around just over $105 a barrel, and WTI around just over 101 are slightly lower in the Asian morning trading today, slightly lower to sideways. So what that tells us really is that the rally that we have seen in the recent days seems to be losing steam. I guess some people would say maybe it's taking a pause, but I would think it's losing steam mainly because of the overnight developments. So while the Egypt situation is far from resolved, what we have seen is that the president who was refusing to step aside has actually been put under house arrest and ousted in a coup. So overall, the market is taking some breather as a result of that, and perhaps now hoping that things will calm down a little bit in Egypt.
Vandana, we've also been observing the premium between Brent and NYMEX narrowing the past few months. Why is that happening?
Yes, Aisha, that's a very good question. Also a spread that the market keeps a very close eye on. So a few factors moving Brent and WTI in slightly different opposite directions. What's happened in the U.S. that has resulted in a far bigger rally in WTI prices in recent days is not really the Egypt situation, but the U.S. stocks data, which is released on a weekly basis, earlier this week surprised the market that, when it showed that U.S. crude stocks had declined by 9 to 10 million barrels week on week, which is a huge drawdown in stocks, and it was much above analyst expectations. Equally, there was also a drawdown in gasoline and distillate stocks. So that put a huge upward pressure on WTI, but and equally Brent is a little bit weak right now and has been relative to WTI because Brent reacts more to demand from Europe, and Europe, as we all know, the economic situation is not good. Year on year, their oil demand is going down as well, so it doesn't lend as much support to Brent prices. So currently we are seeing Brent spread has crashed to about just over $4. But interestingly, going forward, the market expects this to widen back again because the fact remains that the U.S. is awash with crude. It's producing surplus amounts of light sweet crude. So also as the U.S. refiners shift back to using more sour and heavy crude, their consumption of WTI kind of crudes will go down. So the expectation for this spread is to go back to $6 to $8 range for the near future.
Vandana, Egypt will soon have a new leader, and eventually the political problems in Egypt will fade away. So once the dust settles down, do you think crude could crack by about 5 to 7%?
I would expect that, Nikunj, yes, because we've seen in the past, I mean, everything else being equal, how by and large crude prices going forward, just as we have seen in recent months, will continue responding mostly to economic data. So the major economic headlines from Europe, which are kind of now predictable, headlines from the U.S., which have been slightly positive. The economy seems to be getting back on track. But also the market has been, of late, taking a very close look at what's happening to Asia, especially China, and zeroing in on a lot of signals that are pointing to quite tepid or mild growth, economic growth and oil demand growth in China. So that's what the market will be focusing on. Of course, going forward, there are flashpoints in the Middle East which will remain with us. Right now, overwhelmingly, the picture is that the market is oversupplied. OECD, the stocks in the commercial oil stocks in the developed countries are more than enough. OPEC has plenty of spare capacity now. So even though Iran supplies have gone down dramatically, the fact remains that demand overall, global demand is not too good. The picture is not too good, and supply is enough. So yes, in answer to your question, I would say probably Brent should find levels back around $100 a barrel.
Vandana, good chatting with you. Really appreciate you taking the time out and joining us on the show today.